Good morning, everybody, and welcome back to the Opportunistic Trader. I wanted to point out that I put in the right-hand chat, Larry actually dipped his toe in on the most popular stock in the market right now, Tilray. He bought it at 130. He's using a 121 stop, so we'll keep an eye on that. But we're joined by Tony Greer, who's been talking about Tilray and the whole cannabis sector. How's it going, Tony?
Larry bought a cannabis stock. Doesn't he know this is a bubble, like the 3D printer bubble and the Bitcoin bubble?
Well,
Larry, what's going on
I
with
want
you?
to follow up. There are a lot of amazing comments that went under the radar yesterday. On your call, Larry mentioned he has never and doesn't plan on ever smoking any of these products. And I said after ever is a long time.
Yep.
Well, I might get stopped out in about seconds.
Oh yeah, it's a tricky sector. It's a
Yeah,
tricky sector, Larry. But
crazy.
I think that we're going to get, like I wrote about in my comment in my note this morning, I think that we're going to see strength from some of the other names that haven't been, the marquee names. What's interesting to me, Aurora Cannabis, after the Coca-Cola announcement got a nice lift, and that stock has been under pressure because if you remember, they took over Med-Relief. And if you were long Med-Relief, you got 3 point something shares of Aurora Cannabis in the deal. I was long Med-Relief, and I held on to my Aurora Cannabis while everybody in the market was pitching theirs into a hole below $8. And so now that selling pressure has been alleviated, and the sector is still very much buoyant, I think that Aurora Cannabis can go ahead and start taking the lead now. I'm enjoying being long the ones that aren't necessarily in the spotlight. But then I look over at some of the smaller names that are my favorite names in the space, like Hexo and the Green Organic Dutchman, and they're trading really, really well and very orderly too. So that sector's in good shape, and we're making new 52-week highs here, all-time highs in the S&P. We've got a continuation of that aerospace and defense rally that I mentioned that's riding the back of Lockheed's breakout. We've got transportation stocks breaking out to a new high because rails make a new high every day when you're running 3% GDP. We've got the trucking story on the run. The airlines are picking up. So, it's tough to be bearish the transportation sector. And, we've just got a little bit of a pullback in the technology names still centered around social media. And I guess you've got a pretty good picture of the markets right there.
Yeah, two things. So I saw earlier you were talking about, you've been talking with us for a number of days now about being bearish social media, and it's definitely been underperforming, and tech has been underperforming. On this last rally, like this week, we've had a pretty strong rally, and like you said, it's many of those sectors you've been talking about. While tech has kind of been underperforming. Apple's below 220 here. I know you've been bullish Apple for a little bit, but what are your thoughts here?
Apple was just a trade, Apple was just a trade where I saw a window that it seemed like there was a clear runway for it to break out above 200. I bought it above 200, sold it at 225, and I'm not even looking at it right now other than, to see if it's giving the market any kind of clues to direction. But Apple, the trends are in great shape. They may have backed off the highs a touch, but they haven't even touched a technical support level. So we don't even know if we're testing the trend on the downside. I guess if I'm starting to see what's interesting to me, Mike. I guess this week is that base metals have taken a pounding and are closing strong on a Friday, and that's a really good tell for me. It could be one of those situations where you wake up, you look at the market Sunday night, and iron ore is up 3 or 4%, and the base metals are all really strong in Asia. As a follow through to this week's price action. And we've the basic materials sector has, and metals and mining for that matter, in the XME has been kind of dead money for the last couple of months. So it's interesting to see if the base metal sector gets washed out here and copper and aluminum start rallying again. I'm going to want to get back into those industrial metals names in XME like Freeport-McMoRan and Alcoa. Century Aluminum is my favorite chart right now. That chart just got halved from 25 to 12. I started buying it after a double bottom that I'm looking to add again on a breakthrough of 50-day moving average up above. So I'm seeing some names there that can turn just for a trade that I'm getting excited about. And that's really all
Yeah,
that I'm.
following up on that copper, it just looks like 4 days ago we traded in Copper below 260, and right now we're trading 284 and change. So that's been a dramatic move this week, and comes with the support in the Asian equity markets. China last night was up about 2.5%. So it seems like that's moving pretty closely correlated.
Yeah, the dynamic in base metals right now is that hedge funds got short copper into a key Fibonacci support level that I was jumping up and down, pounding the table about at 5,800 in LME copper. That level held. Now we took out the 50-day to the upside. We're going to test the 100-day on the upside at 6,400 or 6,450. And I think that could put metals and mining stocks in a little bit better position to rally a little bit into the end of the year. They're going to get weighed down by gold stocks, which just took another, $20 pounding, $15 pounding this morning. Emerging markets are bouncing and gold is going down. I mean, that's a lousy dynamic if you're a gold bull. With the emerging market bounce, I would have expected gold to be 12 and a quarter bid, and you come in this morning, it's knocked down below 1,200 again. I mean, the price action is utterly pathetic. I can't find a single thing about gold or silver to be bullish about.
Well, that's funny you say that. I was just thinking that. I mean, we've had the dollar weaken. Euros pop from 113.50 up to 117.50. There's been a few stories that would typically make gold rise, and it just hasn't. For about a month now, we've been trading between 12.15 and 11.95, and now we're at the bottom end of that range. And that's the question: if you're bullish, what's the case to be bullish here? And not saying it can't go up, but it doesn't seem like there's much of a case right now.
No, the bull case is groupthink right now, and what the bull case is actually in gold right now are the bulls that are wearing their gold from 1350 down to 1200 are suddenly chirping up and saying, this is now where you buy gold, right? We were wrong at 1350, but at 1200, this is the right place. And then when it goes down another $100, you'll hear the same thing. You'll go on financial Twitter. Everybody will be bulled up gold on the dip, and you'll look at the performance and it'll be down, 20% by the time the year is over, and they'll all get rinsed. But it's like this bizarre little subculture in the equity market. It's bullish.
Funny. As we speak, I see Vince Lancy is typing, and he's our gold guy, so he's probably eager to chime in. He's just waiting.
He wants to kill me. He wants to kill me.
He's like chomping at the bit. I wish you were on audio right now.
Get him on the show. I'll debate him about gold all day long. I mean,
he's kind of neutral here, but he has strong views and some different levels he's been looking at. And another reason why it seems like gold also probably more on the bearish side is with rates going up. We got the Fed next week coming up on Wednesday. It's going to raise rates. That's baked in. But that'll be interesting to see what they have to say. But with rates moving higher, Japan, their yields moved higher overnight. Yields are moving higher globally. That's also typically bearish for gold.
Yep. I mean, I'm still looking at gold as just a non-yielding asset in a world that is showing signs of subdued, controlled inflation, higher interest rates, and much more attractive yields than putting your money into a rock in a safe right now.
Just giving you, Vince typed in agreed. Gold is now tying itself to the yuan, and the yuan vol is flatter. And gold is sadly more submerging markets where only diehards are bullish.
That's a good assessment.
So what do you think? Here we are, all-time highs roughly in the U.S. markets. When we're coming into the weekend, what sort of themes are you looking at? Like, what's going to change this theme that the past few months move higher, climbing the wall of worry? Is there anything with the midterm elections coming up, the Fed next week? Is there anything to be worried about if you're a bull?
The yield curve is still, that sort of it's a little bit of that canary in the coal mine to me. I'm not sure if it's different this time about the yield curve, but it's interesting to know if the yield curve goes inverted, that could change everything. Like people are saying, what was that?
I think that was just Larry coughing.
Oh, the yield curve, people have been talking about a flattening yield curve, meaning a precursor to recession. The Federal Reserve has stated specifically that they don't see, signs of that. So the economy is still in pretty good shape, but we've got this yield curve that's still collapsing. It's collapsing towards zero. I would imagine that if the yield curve goes inverted, that it will start to attract lots and lots of media attention. And that might give the market pause. If we have a real spike in 10-year rates up to 320 or 3.25, we get the yield curve inverted, and then God forbid you tack some weak data on top of that, and that could certainly derail this rally. I'm still a believer, Mike, that we are, while the stocks can grind higher, we are doing so in a higher volatility regime. And that's the volatility market pricing in a premium for the weakness that's going on in emerging markets, which is being caused by Trump winning new trade wars every single day.
Yeah. Well, just scanning the markets. One of the themes for the year has been metals and commodities ex crude underperforming. But today we have a strong commodity day. Crude's up about 1%. Like you said, copper's up over almost 4%. So it's a strong commodity day, and commodity sector as a whole is underperformed. So once again, technology's up small, but underperforming, whereas technology's outperformed this whole year. So some money coming into the commodity sector right now.
Yeah, it's an aggressive rotation. Definitely an aggressive rotation here into the highs. So we'll see different sectors sort of take leadership, and they'll grind slightly higher and punch new highs. And then I'm still confident that there will be, a shit show headline out of Turkey or out of Brazil that suddenly puts, the emerging markets back on their butts, gives everybody, those jitters about global growth. And then, you'll have a tradable pullback in the S&P as well. So,
it's funny you say that, because we were just talking about that before. At one point, probably 6 weeks ago, dollar Turkey was the talk of everything. It was like, oh, what's dollar Turkey going to do? Are they going to release the pastor? How's that going to affect the S&P? Things of that nature. But it's gone quiet. That said, I don't even know how Turkey can sustain a currency at 6.25, where we're hovering right now. We've been here for 4, 5, 6 weeks now. Whereas just at the beginning of the year, we were at 375 for a country that imports oil. I think that long term, this is a big Turkey negative. Not saying that that's going to spill into the broader markets, but Turkey at 6.25 is big issues.
Well, they just raised rates to 24%, so that helps keep some capital in the country. You know what I mean? That's going to be that's the headline that knocked Turkey CDS all the way back into support. That is one of my best barometers to watch, Turkey 5-year CDS, because if people are still expecting to get paid, coupons from Turkey, if they're concerned about it, they will buy the CDS on this dip that was just caused by their central bank raising rates and the currency strengthening off a bit. So I think that's the sort of linchpin and where you keep your eye, and we'll see what happens next. I'm still expecting some kind of a bearish headline from them.
Yeah, well, there's definitely going to be more stories there. All right. Hey, Tony, thanks a lot for the info. Have a great weekend. Thanks for all the help this week. You've had a lot of interesting comments, thoughts, takes on the market. So thanks for that.
Anytime, man. Good luck, Larry, with the Tilray.
Hope yeah, it's funny. I just took a look, 128.40 and still alive. So we'll see what happens. That's the Friday trade, Tilray. Might even go green, actually, as we're speaking. That thing, the bid offer spread is about $1 wide.
Yeah, that's what you'd expect. Nobody knows what's about to happen to that thing, but it will be fun to watch.
Yeah. All right. Talk to you later, Tony. Thanks.
Good day, Mike.